Funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board.
Soybeans are found on dinner tables around the world. Some form of the soybean is found in baby foods, snacks, cooking oils, and many other food items eaten daily. And soybeans provide the protein in the diets for livestock and fish. The Nebraska soybean farmers support research to develop new soy-based products for foods, livestock, and industrial uses through their checkoff dollars. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Darin Newsom analyzes the USDA's August crop report. Ron Plain looks at weak U.S. pork exports. Galen Erickson talks about cutting silage, and Brad Lubin discusses farm program payments. DTN senior analyst Darin Newsom is our corn and soybean market analyst this week. The USDA's August crop report indicates better yields will lead to bigger crops of both corn and soybeans as compared to its estimates in July. 3 of the top 5 corn-producing states, Iowa, Nebraska, and Minnesota, are expected to achieve record yields. And Nebraska's projected soybean yield of 56 bushels an acre is anticipated to be the highest in the country and also the best on record in the state. We talked with Darin on Wednesday after the report and his accompanying webinar at DTN in Omaha.
In my webinar, basically summed it up in 2 words. One, the yield title that I put on the webinar, but mostly just wow. I mean, there was a real wow factor to this round of reports. I think things that most analysts, most in the industry, just didn't see coming, and that again was the yield numbers that were increased for both corn and soybeans.
Do you think the yields were reflective of what we've seen in crop conditions, because there's been a big difference between eastern and western?
Mm-hmm. The crop condition, here's the interesting thing, that NASA's weekly crop condition numbers really are irrelevant because USDA doesn't look at them when establishing yield expectations. The methodology for collecting that data is also questionable, but if we really take a step back and look at the conditions that did improve from, say, mid-July through the end of the month when these numbers were tabulated, we do see that that makes a bit of an argument for some better yield numbers than what we saw in the July reports, when, because that was done after a June that had seen a lot of rainfall, some very poor field conditions. So again, having a moment to reflect on it, it's not as illogical as it might have sounded right off the bat.
How did the stocks numbers play into this today?
Stocks were affected, obviously, by the increased production numbers. We saw increases in stocks for both corn and soybeans. Corn came in like at 1.7 billion bushels, up a little bit from 1.699 in July. And soybeans climbed to 470 million bushels, which is just an astronomical number for domestic soybeans. Now, of the two, I really tend to disagree with the soybean number. USDA always has a hard time calculating domestic soybean stocks, and I don't think they're that close this time around either. It's in complete disagreement with what the market's been saying all along. But it is what it is, and it was a huge number, and the market reacted.
So we're at Wednesday, right? Barring what happens Thursday and Friday, tell me where we've gone here with both corn and soybean markets, with big movements on Monday, Tuesday, and today on Wednesday.
Well, going back to last Friday when we saw a strong up move, followed through with it on Monday, we were just on the brink of really seeing a bullish breakout, and then to come down Tuesday and collapse on Wednesday, we did some major chart damage, particularly in the soybean market, with the November contract going below last October's low of 904. And by all appearances right now, looks like these markets are going to continue to struggle. So I think we've done some chart damage. I'm probably one of the last bullish market analysts in existence, And even I realize the problems that are going on right now. I realize that these markets are going to have to find some buying very soon, or we're looking at a major slide starting.
Your bullishness was because of the charts, though, so we've shredded that up enough that it's concerning you.
Yes, we have. Now, the spread charts, they're still bullish, but the futures price charts and the cash price charts themselves all of a sudden look very bearish. And it's that dip below the October low, particularly in the soybean market, that's the most concerning to me. Corn's still holding where it needs to, above 351. It may try to stabilize, but that soybean move today, that's what really has my attention.
Is the demand environment becoming concerning, specifically the demand environment for exports, when you factor in the strength of the dollar and what's happening in China this week?
This China news has really been interesting to watch play out. They devalued the yuan, and the reaction in both financial and commodity markets has been to see some selling come in. But crude oil was able to turn back around, and it looked like soybeans were going to be able to stabilize as well. Now, the overall export situation, demand for both corn and soybeans is expected to go up in 2015-2016 above what we saw in 2014-15. But yet the U.S. is going to play a smaller role. Doesn't really make a lot of sense to me. I know there's a lot of supplies, particularly in soybeans in South America, but the U.S. is still the #1 producer of corn in the world. So to say that we're going to see exports trimmed even further from what we saw this year, I think there's a lot of time yet to see if that actually happens.
So maybe this is a lazy question, but after what we've seen today, where do we go from here in terms of trying to think about our selling strategies?
Well, selling strategies are going to be very difficult at this point. I think a lot depends on what happens, not only the balance of this week, but what happens next week. And when we start to get some more weather news in, some more headlines coming in, if we can't start to stabilize these markets and maybe give us some opportunities to get some more sales on the books for this new crop. If not, if we actually break through, and let's say we see soybeans go below the $9 level and we see corn take out that $3.50 level, it's going to be very difficult to get new sales on, at least here over the next 30 days.
Next week, Roy Smith will join us to look at corn and soybean markets. We also have Hog Market Analysis this week with University of Missouri Extension economist Ron Plain. The latest export data released last week shows June pork shipments were up less than 0.1% from June 2014. During the first half of 2015, while foreign buying for U.S. pork was weak, American producers also ramped up production. Outputs for each of the 6 months were above year-ago levels, and 3 of those months, February, April, and June, set records. We started our conversation with Ron Tuesday morning by asking why the pork export market has been so sluggish.
Yeah, it's been a disappointing year, Jeff, for sure. The big problem is the dollar's very strong relative to foreign currencies, and that makes U.S. product look very expensive to foreign customers. And the flip side of that, it makes foreign products look cheap to U.S. buyers. And so exports of pork down about 5% in the first half of this year. Imports, on the other hand, up sharply from a year ago.
So imports are up, exports are down, and production over the first half of the year has been really, really good. Where is all of that pork going?
Well, consumers are eating more. Beef supply is down this year. Turkey supply is also down, and so it's been a good domestic market. Domestic demand for pork has been up in the first half of this year, and so U.S. consumers are soaking up some of the extra pork.
Should we expect that we will see further easing in the meat counter?
Well, yes. Seasonally, hog prices tend to decline as you move into the tail end of the year. Usually somewhere around August or September is the peak in grocery store prices for pork. So yes, once fall gets here, consumers ought to see a little bit more attractive prices in the meat case.
I should ask about production. Do we expect less as we go further into fall?
Maybe a bit less. Gosh, we've been killing lots of hogs this summer. 10 weeks in a row now that slaughter's been up 10% or more compared to a year ago. For the year, we're looking for the second highest hog slaughter ever, behind 2008, and so probably somewhere 7.5% more hogs to be slaughtered this year than last year.
And weights?
Fortunately, weights are down. Last 19 weeks now, weights have been lighter than a year ago, so lots of hogs, but producers are compensating a bit by moving them to market a bit sooner.
Where are market prices right now, Ron?
Carcass prices for hogs around $73 per hundredweight. That's equivalent of about $56 per hundredweight on a live weight basis, and a bit lower than where we were earlier in the summer, but there's probably some more decline going to be in front of us.
When you look at market prices, Ron, are they moving as you would expect on a seasonal pattern?
Yes, normally we get the highest hog prices of the year in the summer months, and that was the case this year. It wasn't all that good of a peak in prices because of the heavy hog slaughter. And then seasonally, as we move into the fall, normally we'll see lower prices, and that's our expectations for this year.
The big question now, how does that affect margins for producers?
Well, we're making money this summer, as we often do. May profits around $23 per head. The preliminary numbers on June says also in the low 20s, and again in July. We'll do well this summer. We'll probably be back in the red ink by October. Fourth quarter, probably negative, somewhere around $5 to $10 per head.
Overall for the year, a profit?
Yes, a slight profit this year. Last year was the best year ever for hog farmers, and so even a slight profit after that kind of performance is a good year.
Next week, the USDA will release several reports valuable to the pork industry. The agency is scheduled to update data on meat prices, slaughter numbers, and cold storage volumes for the month of July. The South Central Ag Lab near Clay Center will hold a field day Wednesday, covering a wide range of cropping issues. We recently asked Nebraska Extension plant pathologist Tamra Jackson-Ziems to outline what growers can see at the event.
We have tours focusing on cover crops, especially various topics like water use and planting dates for cover crops. We have another tour focused on pest management, including using BT corn for rootworm management, focusing on nutrient management issues, especially using sensors in the crop for fertilization decisions. And our final tour will focus on soil and water management, and especially the use of various soil moisture sensors.
The field day begins at 8:30 and runs until 4 o'clock. It's free to attend with a noon lunch and keynote speech from IA and our Vice Chancellor, Ronnie Green. You can find more material on the location, presentations, and RSVP information on the Market Journal website. The event is sponsored by UNL's Southeast Research and Extension Center, the Nebraska Corn Board, and many others. The time for cutting silage is approaching in the state. Nebraska's corn crop is currently a bit behind schedule, though, as the percentage in the dough stage is 11 points off the 5-year average, and the amount dented is 8 points behind the norm. Earlier this week, we talked with Nebraska Extension beef feedlot specialist Galen Erickson about cutting silage for cattle diets. We started by asking how to maximize yields based off the timing of cutting.
It's really a fine line between harvesting when you get maximum yield versus quality versus the right moisture. But once you get to mid-August, it's time to be, if you're going to put up silage, now is the time to be thinking about it, preparing, and planning, because it's the time to get started probably in the next week or two.
What position does that now operate in the feedlot diet? How valuable is it for the cattle?
Well, you know, silage is a traditional feed. It's been around for a long time. It has TDN about 75, but it does vary depending upon when you cut it. And so we've been revisiting how does silage fit in today's diets when you have distillers grains and other byproducts in the diet. How does it work for backgrounding? But more recently, we're interested in, can smaller, maybe traditional farmer feeders feed more than just as a rough feed source, and is that more profitable? And it appears it is, as long as we put it up correctly and minimize shrink.
Tell me about some of the dangers in making sure it is stored correctly.
Yeah, you know, the key for silage, and whether it's high moisture corn or corn silage, is getting the air out. Air is the enemy. It's got to go anaerobic during fermentation to preserve itself. And so the right moisture, because water helps keep it anaerobic, but you don't want it too wet. And if it gets a little too dry and you're putting it in the bunker, it might be hard to pack and get the air out during the packing process. But with all that said, We think that if you look at the data from Pioneer and the data now that we have from the University of Nebraska, as well as data from the University of Wisconsin, you need to be thinking about a dry matter of 36 to 38% in our opinion, and that therefore, 62 to 64% water, which is a little drier maybe than traditional. Now, more recently, we've looked at maybe even going as high as 43 dry matter, and it has some implications, but the drier the silage gets, the more yield you get, but quality does start to get depressed. So as soon as it gets to black layer from that point on, or grain maturity, plant quality really deteriorates over time. So we're trying to fine tune this recommendation, but if I had to tell producers today, I would target 37 dry matter.
Now, as you look at that cornfield, how do you assess when the time is based off of what that moisture might actually be?
Yeah, it's a real challenge, as you know, when you have standing corn. Our best recommendation is always to chop some, whether that's by hand using a chipper or actually pull in with your silage chopper. Problem is, most people, when they want to start cutting silage, it might be a custom operator. They don't want to chop a little and then wait a couple days for a dry matter analysis. So our best estimates are for you to hand harvest some plants, chop it up if you can, and run a dry matter overnight to get the best measure. You can also do microwave dry matters, which are a little less accurate, but the other way, which is much easier, is looking at the physiology on the corn plant and basically looking at the ears and judging it from milk line. So when you look at milk line, you want to be at about 3/4 of milk line on that kernel to really pull in with your chopper, and you should be in that 35 to 38% dry matter.
And are we talking about then feeding it more in the diet like you were mentioning before?
Yeah, we have research that's ongoing looking at the traditional inclusion and finishing diets, which would be in that 15% of the diet or so on a dry matter basis. We've been looking at it as high as 40 or 50% in the diet. And if you manage shrink and get it put up well and maintain the energy in the silage, it appears that the most profitable level, if you're a farmer feeder and can handle it, would be in that 30 to 40% of the diet.
The UNL Beef website contains more resources on using silage. We'll link to that information on the Market Journal website. There could be a significant difference in farm program payments producers will receive this fall for the 2014 crop year. In a recent Cornhusker Economics article, Nebraska Extension Public Policy Specialist Brad Lubin says the vast majority of Nebraska's corn and soybean farmers chose ag risk coverage at the county level, but payments per acre could vary noticeably from county to county. We talked with Brad Tuesday morning about what growers might be able to expect from their farm program enrollments.
Certainly producers face this big decision this spring about enrolling, decisions on base acres, decisions on payment yields, and then decisions, of course, on the farm program itself, ARC versus PLC. Well, interesting thing, one of the first points, producers updated base acreage. They had this option of keeping what they had versus making an update. Many producers would have chosen the update, which we would have, I think, projected based on an updated base that more accurately reflects what you grow. That means the addition of a lot of new corn and soybean base acres, primarily at the expense of wheat and grain sorghum.
Which program did producers lean towards in Nebraska?
When you get to the choice of which safety net to sign up for, the revenue-based ARC or the price-based PLC, Nebraska overwhelmingly chose ARC. And ARC-CO, the county plan in particular. Better than 90% participation in ARC for corn and soybean producers. Less but still strong and a high percentage that enrolled in ARC for wheat and grain sorghum and other commodities. So the overwhelming choice here, the ARC was the overwhelming choice in the Midwest. You really have to go to the southern part of the country and a few commodities in particular, wheat and rice and a couple others, where PLC was the more obvious choice.
Now, as you look at potential payments, first tell me how you can start to calculate them now, or how you can start to expect what producers might see in the fall.
Well, we also have to remember this long sort of calendar. The 2014 crop year, long gone at this point, but the marketing year is just about to wrap up, actually officially here at the end of August. We'll know those prices from the 2014 crop marketing year by the end of September. Payments, if any, on the 2014 crop program payments are due in October. So we're just now calculating those payments that will be due this October for last year's crop. We can look at published yield data to date, and we can look at price estimates to date. Now, based on some late July, early August analysis using some July forecasts, we can look at yields where available and calculate payments, and we'll see substantial payments in Nebraska under the ARC program. We will not see PLC payments in Nebraska. We will not see PLC payments for the crops grown in Nebraska. In fact, the only crops nationwide that look like they'll get PLC payments are peanuts, long grain rice, and canola. Well, peanuts and long grain rice get PLC payments. Peanut and rice producers signed up for PLC. That kind of fits. In the Midwest, where we signed up for ARC, we're waiting for final numbers to know exactly what those ARC payments will look like.
You said they could be substantial, but does that hold across the state, or does it differ between counties?
It differs substantially. The ARC program is not the acre program that it succeeded. Acre was this state level guarantee, and if it triggered, everybody was going to get a payment. ARC was designed at the county level, in part because producers wanted that more sort of responsive safety net. It's county by county, and it's irrigated and non-irrigated practice by practice in those counties with enough acres of both. That means that across county lines, some counties are slated for better than $80 per acre payments, while next door there may be $20 or $30 payments, because yield differences translated into revenue differences and payment differences. There are even counties where within the county, irrigated will get big payments, non-irrigated won't. Well, step back to 2014. Prices are down substantially. If yields are up, revenues are okay and revenue payments are smaller. When non-irrigated yields went up in 2014, so some of the non-irrigated practices don't get big payments. Irrigated yields might have been above average, but not substantially, and so the lower price dominates. So we see differences in counties, we see differences across counties, we'll certainly see differences across crops. It will be substantial in Nebraska, but it will also be very different from area to area and crop to crop.
Brad says the August crop report was bearish in both corn and soybeans, but the estimated price changes in the supply and demand report look like they were confined to the 2015 crop forecasts. He says since there were no changes to the current estimates to the 2014 crop marketing year prices that were significant to Nebraska, 2014 farm program payments remain unchanged. You can read Brad's full Cornhusker Economics article on possible farm program payments through a link on the Market Journal website. The report contains maps of Nebraska with current estimates for each county with enough available data. Several ag-related bills enacted into law in the 2015 Nebraska legislature focused on livestock development. The August Nebraska Farmer says most of the bills passed this year become law 3 months after the end of the session, which was May 29th. This month's issue includes details on legislation dealing with county zoning, grants, and agritourism. To read a summary of these new laws and how they affect agriculture, you can check out the August issue of Nebraska Farmer. Now, with this week's weather forecast, here's Nebraska Extension State Climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Of course, during this last week, we had that cold front move its way through during the later part of last weekend. We did touch off some thunderstorm activity across southern Nebraska. In fact, enough precipitation fell in most locations for the drought monitor authors to eliminate the vast majority of the abnormal dryness conditions that were depicted in southern Nebraska. There are some isolated pockets where we are in the county to county and a half wide area where we do still have that dry signal, but it's too small of a scale for the drought monitor authors to depict on a national basis. Another area that we are paying a particular attention to is the northern panhandle and the northwestern corner of the Sandhills, where we started to see a dryness pattern materialize over the last 2 to 3 weeks, and we further anticipate that if the dry conditions continue, this will be an area that is right now under the gun for upgrade to abnormally dry conditions, either in next week's edition or the following week's edition of the drought monitor. So, do we have the chance for precipitation? Well, let's take a look at the upper air models and see what we have in store. Here's that ridge over the southwest, and it's still encroaching into Nebraska, so very warm conditions are expected for today. You'll notice there's a trough in the Pacific Northwest that will begin to slide toward the northern plains and start to flatten this ridge out as we go through the next 24-hour period. So as we get into tomorrow, we'll start to see this ridge buckling back toward the southwest and some of that energy starting to move into the Dakotas. Right now, the models are indicating that the surface front will start to make its way through the state during the late afternoon hours of tomorrow afternoon, and then that will progress through the state as we go into the early morning hours of Monday. So we might see some thunderstorm development across the northwestern portion of the state tomorrow afternoon, more of that carrying through central Nebraska during the overnight hours, and as we get into Monday, we'll see that the ridge basically holds up right along the northern periphery of Nebraska. Some of that cool air will filter in and generate thunderstorm activity as a surface front hangs up somewhere across southern Nebraska. So we'll have that continuous chances of precipitation. In the western part of the state, the ridge will start to try to push back in, and so most of the moisture should remain in the eastern half of the state. And as we get into Tuesday, you notice the ridge starts to bubble up again as another system comes into the Pacific Northwest. So instead of a cooling trend as the model's been predicting the last few days, it does look like they're shifting back to a warmer pattern starting to develop on Tuesday as that ridge takes place, and most of the moisture will just basically skirt the state of Nebraska. We might see some early morning showers in the eastern part of the state, but overall a drier pattern starts to materialize. And as we get into Wednesday, we'll notice the ridge temporarily builds in, but you'll notice that this trough comes into the western United States. So we're going to start to see some moisture pooling across the western high plains, so thunderstorm development may occur isolated in the western part of the state. In the eastern part of the state will stay warm, very warm in fact. And as we get into Thursday, now the trough starts to make its way in, and we'll start to see general thunderstorm activity across the western half of the state, progressing into the eastern half of the state as we get into Friday as this trough starts to move toward the Great Lakes region. So if we look at the temperature forecast, we're looking at up and down motion in terms of temperatures for western Nebraska, primarily starting to cool down in the early part of the week, warms up midweek, and then we start to see thunderstorm activity increase in intensity. 8 to 14 day forecast indicates another shot of cool air with that trough moving through. And as we look in the precipitation, very wet conditions for basically the eastern half of the country.
Thanks, Al. Today's interviews are available on the Market Journal website and through the Market Journal mobile app. They include information on the August crop report, hog markets, cutting silage, and potential farm program payments. As always, you can follow Market Journal during the week on Twitter, Instagram, and Facebook. Next week, Roy Smith will analyze corn and soybean markets. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.